Hello investors, wish you all happy investing, and I wish you all and your family a very good health. As we all know, we are going through an unprecedented crisis, and from the moment coronavirus has spread, it has become completely unprecedented, and markets have corrected 35% and then recovered 20% from the bottom. Crude oil prices corrected significantly yesterday, went into negative territory, which at least I have seen it for the first time. So I would say that these are unprecedented times, and I would say that a medical solution will only make a sustainable bottom. But right now, to share with you a market perspective, right now we are at Nifty of around close to 9,000. FY21 EPS pre-coronavirus was likely to be rupees 650. Now the estimates are being cut down to rupees 550. So we are trading at around 16-17 times. So we are trading at earning yield of around 6 to 7%. And direction for bond yield is downwards, while direction for earning yields can be upwards from FY22. So I would say that we are in a good valuation zone. And saying that, Contra portfolio offers very good opportunity because we try to buy large businesses which generate huge amount of cash flows, which are very genuine businesses. For example, our portfolios were overweight on pharma, telecom, FMCG when this happened. And so I would say that when crude oil is at $20, definitely we have a huge advantage in terms of $40 billion savings for our country, which our government can use to stimulate the economy through infra spending or by putting money in the hands of people. And so once the lockdown situation opens, once the coronavirus situation stabilizes, we might see a recovery and markets will respond to that. Right now, in this current correction, we have increased our weights in telecom, pharma, and so that has helped the portfolio. And I would say that very select financials which have ASA franchises and which have done very prudent lending, those kind of stocks have already given us good alpha. And I would say that earning yield, bond yield maths actually works. I know that current situation is such that nothing is working as of now, but I would say that when the coronavirus situation stabilizes, and of course the crude oil thing stabilizes, lockdown starts opening up globally, the things will become clear, and investors, because there's a huge amount of stimulus which has happened, and QE of unprecedented level has happened across the world. So this money has to find some place, and once these two things stabilize, one is COVID19 and second is crude oil, the money will find its place in asset classes which are attractive. And I would say that low leverage companies which generate a lot of cash flows, which provide a lot of dividend yield, are the places where this money will go. And that is rightly our Contra portfolio is positioned in that manner. And so I would say that one has to, even the other point is that we have to buy businesses where fixed costs are low, because right now during a lockdown there are so many costs which are there, and you are not doing any business, you are not generating any revenue. So one, if you are sitting on a lot of cash flows, that a lot of cash in the bank, that is going to help because there is no interest cost. And one, if you have a very low fixed cost, that is going to help. So that is the construction of our Contra portfolio today. One is day-to-day needs like pharma, telecom, and second is low fixed cost businesses and high cash reserves companies. So that is the exact positioning of Contra today, because we want to ride through this crisis. And in the past also, I would say that since 14 September when we started, this kind of opportunities have kept coming in the markets. So when we started, crude oil was at 84, and paint stocks and FMCG stocks and private sector banks were correcting, and we went significantly overweight into them. Then airline stocks corrected because oil was at 84. Then insurance stocks fell due to regulatory requirement which forced promoters to sell their stock, and insurance was a structural story in India. And so we went overweight into insurance. And recently in last 2 months, as I discussed, pharma has given us very good alpha. Underweight on financials has provided us very good alpha. So I would say that this kind of select opportunities will keep coming in the markets. And because there is a huge liquidity, if you feel that some stock or some sector is going to behave in a defensive way. For example, when we were overweight on pharma, we never thought that pharma stocks will give 40% return in a month. We ourselves were baffled with that kind of a return coming in 1 month in a defensive sector like pharma. So yeah, because there is too much of liquidity in the markets, if you get if you go into right direction, if you buy right set of stocks, then you can make huge amount of money even during this volatility, and that is what is helping us. And so we welcome you all to contra investing, and I would say that this is the way to go, because markets going ahead are also going to be very volatile. It is not actually a market where of course there are some stocks which you can sit right and you can just ride through for longer term, but in near term market is going to be volatile, and so you have to take advantage of that volatility. You have to, but of course without compromising any fundamental parameters, and most important amongst them in current times is leverage, fixed cost, and promote business quality, balance sheet and cash flows. So, and that is our primary focus, to buy such large businesses. With this I'm ending, and happy investing investors.